As the U.S. market is closed for the weekend, we are looking at the final closing print for AMTD Digital, ticker HKD, from Friday, October 31, 2025. And what a close it was. The stock finished the session at $2.95 per share. That was a gain of $1.26 on the day, an explosive move of 74.56%. This wasn't a quiet drift up, it was an absolute frenzy of activity. The trading volume clocked in at a staggering 325 million shares. To put that in perspective, this is a stock that often trades a tiny fraction of that. The day itself was a roller coaster, opening at $2.79, rocketing all the way to a high of $5.47, and even touching a low of $2.38 before settling at that $2.95 close. This is the kind of volatility that makes seasoned traders pause. Now, the immediate reaction, the general expectation when you see the ticker HKD moving like this, is to instantly dismiss it. This is, after all, the stock that became the king of all meme stocks back in 2022, surging thousands of percent for no discernible reason, briefly attaining a market cap larger than many global banks. The assumption is that this is just another round of retail speculation, a coordinated pump by traders on social media, with people piling in using their Robinhood app or SoFi Invest accounts, treating it like a casino ticket. The expectation is that this 75% jump is built on air, just like the last time. But here is the reality that immediately shatters that simplistic view. This move was not random. It was triggered by a headline that on the surface looks absolutely astonishing. The company reported its half-year financial results, and the top-line number was a 1,085.9% increase in revenue. That's not a typo. Over 1,000% revenue growth. The company posted $73.2 million in revenue for the 6-month period ending April 30th, 2025, compared to just $6.2 million in the same period a year prior. When a headline like that hits the wire for any stock, let alone a low-float, notorious name like HKD, it acts as a starting pistol. The army of self-investing individuals, quantitative funds, and high-frequency traders all jump on it at once. This isn't like watching Apple stock grind higher for services growth. This is a pure, unadulterated, catalyst-driven explosion. The volume of 325 million shares tells you that this wasn't just the Robinhood stock trading crowd. This was institutional interest, market makers, and everyone in between trying to get a piece of the action or hedge their risk. Platforms like those from Interactive Brokers likely saw a massive influx of orders. But this is where we have to separate the stunning headline from the much more complicated reality. The expectation is that AMTD Digital suddenly found a way to organically grow its business by 1,000%. The reality is that this growth was acquired, not built. The entire surge in revenue is attributed almost exclusively to the acquisition and consolidation of the Generation Essentials Group, or TGE, which became a subsidiary back in October 2024. This acquisition completely changed the company's business mix, bringing in new segments from media, entertainment, hospitality, and fashion advertising. So while the revenue number is technically correct, it's an accounting change, not a sign that their core, pre-existing business suddenly became a rocket ship. It's the equivalent of buying a successful restaurant and then claiming your personal income grew by 1,000%. And the reality gets even more complex when you look past that top-line revenue number. While revenue exploded, so did costs. Employee benefit expenses, finance costs, and other operating expenses ballooned right alongside, which you would expect when you acquire an entire new company. But here is the number that the market seemed to grapple with all day, which is why the stock peaked at $5.47 and then fell almost by half. Profit for the period was $51.5 million, but basic earnings per share, or EPS, actually declined by 52%. EPS came in at 22 cents per share, down from 46 cents in the comparable period. So let's frame this correctly. The company became much larger, but it became less profitable on a per-share basis. This is the central tension. The bulls, who chased it all the way to $5.47, were trading the 1,000% revenue headline. The sellers, who knocked it back down to $2.95, were reading the 52% EPS drop. This kind of fundamental conflict is what creates the volatility we saw. This isn't a stock you place in a long-term automated Schwab Intelligent Portfolios account and forget about. This is a battleground. And what a battleground it was! The swing from the high of $5.47 to the low of $2.38 is more than a 100% move from the bottom. Imagine trying to manage an investment in that environment. People doing their online investing saw their screens flashing green and red so fast it was probably hard to keep up. This is the definition of a trader's stock, not an investor stock. It's behaving less like a mature company and more like some of the speculative Robinhood crypto listings. So, what is AMTD Digital? It's important to understand what this TGE acquisition actually brought in. The company is now, for all intents and purposes, a media, luxury, and hospitality company. We're talking about fashion publications like L'Officiel, luxury media advertising, VIP services, and even hotel operations. This is a massive shift from its original identity as a digital solutions platform tied to its parent AMTD Group. The company is headquartered in France, and its parent is a financial services group. This has always been a complex corporate structure, which is partly why it was so easy for it to become a meme stock in the first place. The float is incredibly small and tightly controlled. Let's look at that. The financials reported give us some interesting clues. As of April 30th, 2025, the company had total assets of $899.1 million and net assets of $548.0 million. If you do the math, that $548 million in net assets translates to a net asset value of approximately $4.34 per share. This is a fascinating data point. The stock, after its 75% surge, closed Friday at $2.95, which is still significantly below its last reported net asset value or book value. The expectation is that this is a worthless meme stock. The reality, at least on paper, is that the market is valuing the company for less than the stated value of its assets. This suggests a deep skepticism from the market. Investors are essentially saying, we see your $899 million in assets, but we don't believe they are worth that, or we don't believe you can generate a profit from them. This is a far cry from the investor confidence you see in names like Nvidia stock or Tesla stock, where investors are paying a massive premium above asset value because they believe in future growth. With HKD, the market is pricing in a massive discount. This is where the debate gets really interesting for anyone looking at this through a Fidelity brokerage account or thinking about it for their Fidelity IRAs. Is this a deep value trap, or is it a misunderstood asset play? The skepticism is warranted, given the company's history and its opaque corporate structure, which involves multiple AMTD-related entities. Institutional ownership is almost non-existent. You won't find this in major Fidelity mutual funds or Fidelity ETFs. This is an orphan stock, held primarily by its parent companies and a small, rotating cast of retail traders. Looking forward, the picture is incredibly murky. The expectation from the bulls is that the 1,000% revenue growth is just the start. They believe that AMTD can now use the TGE platform to build a real, profitable global media and hospitality business. The company has also made announcements about getting into cryptocurrencies, planning to use a $240 million fund for crypto investment, which only adds another layer of pure speculation to the story. This is something that would make a Fidelity wealth management advisor extremely nervous, but it excites the SoFi stocks and crypto crowd. The reality for the bears is much darker. They see an acquisition that bought revenue but crushed per-share profitability. They see a company jumping into crypto as a distraction. They see a balance sheet loaded with assets like dividend income and fair value gains on financial assets that are hard to verify. They see a stock that is and has always been a trading vehicle for its insiders and a trap for retail. The risk is that this 75% pop was just a one-day wonder based on a misleading headline. The stock could easily bleed right back down to its 52-week low of $1.55. The opportunity, if you are a speculator, is that the $4.34 net asset value provides some kind of theoretical floor, and the low-float, high-volume nature means it could squeeze higher on any newfound momentum. This is a story of accounting versus reality. I want you to comment below with your take on this. Do you think this 1,000% revenue jump is the real deal, or is the 52% drop in earnings per share the only number that matters? In summary, Friday's 75% explosion in AMTD Digital was not the phantom meme rally many